Hello, everyone. This is Drew from Best of Us Investors working with Mark on the Platinum Trading Platform. As you may all know, if you have been a subscriber on the channel for some time now, Mark has been helping a lot of members on their swing trades, sharing the top candidates that has been selected out of over 1,000 companies Mark analyzes each week. So today we will be going through some stocks that Mark found interesting based on his analysis with his 10 indicators. So Mark, how does the market look like this week? And are there some stocks that are on your radar?
Well, the market's always interesting, Drew. We got the Dow closing today up for the 11th time in a row, and that's pretty amazing. And I don't think that's happened in quite some time. Got a little bit of jitters in the NASDAQ because of earnings with Tesla and Netflix. And then, of course, this week we have big earnings from the rest of the big Magnificent Seven. We'll see how that goes. But there's always markets go up and markets go down, and money flows to where the value is. And so that's what we search for on the Platinum channel. And for the most part, we've been pretty good success rate. And probably, we try to teach people what to look for in charts for swing trading and give them a higher probability of success. Again, we're not giving financial advice. We're just teaching a system that I use to swing trade. And I'm very conservative in my trading. And I'm also very risk adverse. So other people, maybe someone your age, would be a little more risk tolerant and take a little more risk. But I don't like losing money. And when I do, I feel bad. But for the most part, since we started this in January, you can go on to our watch list and see our results. It's all there on our paper trading portfolio. So here's our watch list, and this is a learning tool we use. This actually we apply in a paper trading portfolio the concepts that we teach about moving averages and oscillators and momentum and just simple things on a chart. We don't get too detailed and overloaded, but things that have helped me become a better trader. And you can see when we put a company on a watch list, the price at the time we put it on, this is not a buy price. This is just when we put it on the list, that's the price. And then I'll watch the company and we'll come over and we will show what happens as far as the day we sell. And yellows are the July's so far. And you can see we're all in the green on July so far this month. And you can see the percentages that we gain on a trade. You can see the number of days we're in a trade. You can see why we got out or what the chart's telling us. And over here, we assume we're trading 100 share lots. And on 100 share lots, you can see this is what we make per trade. And then for the month of July, we're almost up $3,000 in our paper trade. For the year on our paper trade, we're up a little over 20,000. And we still have about $243 in unrealized profit. And you can see we have some earnings coming up on the 27th. I always exit before earnings because it's a market condition that I know is coming up and I don't know which way the stock's going to go, but it usually goes violently one way or the other. And I want to make sure that I'm out because if it goes against my trade, I want to be out and I can catch a bid at a lower price if I want to. So that's why we always exit.
So Mark, have you had any experiences or examples that you saved yourself a lot because of exiting before the earnings?
Yeah, we have. And let's just go look at some recent charts of earnings. Here's an example, Genuine Parts Company, GPC. And you can see we're coming along. We're bouncing off the 200-day moving average. And the day before earnings, which is where I would get out, you can see the next day earnings came out and it dumped. Not only did it dump, it gapped all the way down and it hasn't recovered yet. It's down here bouncing off the intermediate support level. Let's take a look at another one real quick. There's Las Vegas Sands. We came up. This is the day before earnings. You get out before then. You can see we popped up before earnings and came down, closed down below. And then the next day we took a dump. Again, we're sitting right here on the intermediate support level. And we'll do another one. Here's Tesla. You can see Tesla was motoring along. We came up, we're hitting against some sell pressure up here at this level. Earnings came out, dropped a little, and then you can see the next day it dropped too. So it may recover, but this is why I like to get out. I don't want to lose the gap. I don't want to lose from whatever point I've made down to where it's going to end up. And you can see where we are today. We're right finding resistance on the 20. So that's why I get out before earnings.
Well, Mark, thank you for sharing that. I think that gave me a lot of insights. I also know that you think of the support and resistance as a very, very important indicator or level. Are there lists that you share in stocks that you're looking into based on your indicators for this week?
Oh, absolutely. I mean, I look at several hundreds, if not 1,000 stocks a week and charts. And I document where they are as far as the progression of the stock price in a swing trade position. Stocks go up and stocks go down. So I'm looking for stocks that I've had what I call a dumpster, where the price action is dumped for some reason. That may be because of earnings, it may be because of a downgrade, could be anything. And then I watch that, I put it on a list, and I watch that until it starts showing trends of uptrends, which would make it a better candidate for swing trading. So we have what we call a horizon stock list. Those stocks really have not fully met our criteria for swing trading, which is our trading guidelines, but they're setting up for potential swing trading opportunities. And then we have another list that trades stocks that trade below the 200-day simple moving average, which technically means they're in a bearish mode, but you can make some money on that too if your risk tolerance is a little higher and you set your stops and you watch your support resistance. So here's our platinum channel. You can see these stocks not fully met our criteria for swing trading. So we have a few stocks on there. Sometimes we have more, sometimes we have less. Just depends on the ones that I find that meet certain criteria. And then every day, every morning, I'll come in and I will put in, here's where we put it on the list. Here's today's price. It'll show you our gain or loss per share based on 100 shares. We will go and every morning I'll come in and analyze the chart and tell you where support and resistance is. If we look at Prudential here, okay, Prudential, we put it on the list at 94.30. It's closed today at 96.52. So we're up $2.22 a share. And you can see this morning I put the support was at the 200 and the resistance was at 97.14. And now I put earnings on here because I want to be out of this before earnings, or if someone is actually in paper trading this, you'll know that, at least for my guidelines, you get out before this period. So let's go take a look at this chart and see how it did today with support and resistance. So here's Prudential, and we said, this morning on the chart, this is our cost basis here. And this was what we were going off of today. This is how it closed. You can see support is at the 200 or the 9 now, because the 9 is now crossed positively over. We have a nice running pattern up still. You can see resistance, we said, was up around the $97 level, and you can see we went up and just tagged on that resistance. Now, I use support and resistance for potential tradings, either buying in on support or getting out on resistance. Some people would take some off the table here. You could if you want. Depends on your risk, but you still have the ability to get past these sell orders and come up and get a little bit more before your next resistance level. So that's how Prudential work. You can see how, we take it from this day. I'll give you where support and resistance lines are. We also look down at the MACD. We look at the RSIs. We look at the stochastic. And this is how we see our trades. Okay, here's our stock under the 200 SMA list. And again, stocks trading below the 200-day SMA are volatile, prone to sudden price movements, which can result in significant losses if you don't manage them carefully. Again, these are stocks that look like they have upward momentum that we put on a list every week, and then we track it from the time we put it on the list. And the next week it may be on it again, or it may be off, depending on the progress of the list. You can see this week's list, we're up about 28.92 gain to loss per share. And the total gain or loss, you put 100 shares in each one of these at this price here, which is not financial advice. This is just when we put it on a list. This isn't a buy list. You'd been up about $2,800. Now, you got to go and you got to use the charts and learn how to do swing trading. You just can't come into this list and say, I'm going to buy here and sell here. You need to learn the system. But this gives you an idea, once you become more experienced, that we've gone and done the work to look at different stocks. And these ones have the highest probability, in our opinion, to give you some returns. So let's look at what we said, Weiss Markets, which is WMK. Put it on the list. It was $65.40. Today it closed at $67.25. So up about $1.85 today. We said there was support at the 50 and resistance at 67.26. That was before market opened. And let's go take a look at what we had. So here's a Weiss Market. You can see here's our cost basis where it went on the list. We said that there was support at the 50, and you can see that we wicked down and we tagged right at the 50-day simple moving average. And then we said there was going to be some resistance up here at the 65.25 level. That's exactly where it went up and stopped. Wicked up past it a little bit. The sell orders kicked in at this level and brought it right back down. You can see in the past, we've had trouble getting across this particular line. Also, if we can get past this line, the next level of resistance will either be where traders put sell levels above this, or we have the 200-day simple moving average up here. So you can see it's a nice little trend in the upward pattern. We can see we have stochastic rising, the RSI rising, and a crossover of the MACD. But still, I use resistance as places potentially to get out, and support as places to put stop limits on the bottom so it doesn't fall through the bottom. So that's how we use the stock list, and that's how every day we update them. So you can go look at your charts, and make up your own decision on what's good for you and your risk tolerance that you personally have in trading.
All right, Mark, thank you very much for sharing all these insights. Whenever I have a video with you, I learn a lot during the video, and I hope our subscribers learn as well. So with that, if you're interested in these swing trade updates, daily ticker suggestions, educational content, and even live Q&As with Mark on a weekly basis through the Zoom meetings, make sure you join our Platinum member in the description below so that we could make it through this tough market all together. So thank you very much for watching, and looking forward to seeing you all on our next video.